The markets delivered another strong day across the board. The Dow rallied more than 700 points, up 1.5%. The S&P added 1%, and the Nasdaq was up close to 1%. However, the standout was the Russell 2000. It jumped an impressive 2% on the day. That broad-based strength is exactly what you'd hope to see if this rally is going to stick. The main driver behind this rally is that December Fed meeting. Rate cut odds have moved all the way up to 83% after being as low as 25% last week. And today, we learned that Kevin Hassett is being considered as the next Fed chair. He's widely viewed as someone who would support this lower rate environment, so markets have immediately leaned into that. And this all lines up with what I've been talking about. We had that inverse ETF volume spike I spoke about yesterday that went to 43% last week. We saw the $1 trillion washout, and this lines up with the historical window where November usually bottoms. It felt like capitulation last week, and the tape is behaving that way. Alphabet was the big story again. Shares hit another record high after the reports that Meta is looking at their TPUs for its AI build-out. That's huge validation of Google and something we've been monitoring for a while. AI is moving from hype into real infrastructure decisions. Companies want more than one supplier. They want diversified chip supply. They want lower compute costs. They want performance in general. And, Google is now proving it can deliver all three of those for companies. Nvidia was back in the headlines after this, falling out of leadership, but this is just simply AI broadening. I don't think this is a negative look on Nvidia. Even with the rebound, the indexes are still down in the month, but the picture is improving. If the data holds steady, the S&P still has a clean path towards that 6,800 target with upside to 7,000 by year end.